Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Every week is an interesting week, that's for sure.
Mike, the stock market had that huge sell-off last week. Has it recovered, or is it going to recover?
Well, it's bouncing back from that. The S&P 500 fell down a little bit below 3,000, and now it's like 31, 32. But if you go back and look, at a 10-year chart of the market, it looks like the logical thing it would do is pretty much nothing for the next couple months, because we had extreme volatility in March and the market essentially crashed, and then have had this tremendous rally back up. And typically when you see such swings of intensity like that, the market will kind of settle, no matter what the market is, and drift, and then you'll get a more meaningful move let's say by Labor Day or so. So I kind of expect that is what is going to happen. I thought that was starting actually in May. The S&P 500 spent about a month trading around 2,800 and 3,000, and then broke up to the upside out of that. But maybe the range is bigger. Maybe it's 3,200 down to 2,900 or something going forward now. But I do think some sort of range is likely to be established, and kind of put most of us asleep who are watching this market day by day. So I think that's really what's likely to play out here, and then we'll see what happens in the fall.
If you sold in May and went away, would you have been okay?
I think so. In fact, there's one interesting thing happening. First of all, I think the risks in the market are to the downside, even though the market has rallied, and most people still in the market are extremely bullish. But, the economy is not positioned for a huge economic boom. And last week, the Federal Reserve, when they released their FOMC statement, the chairman, Jerome Powell, he said that the Fed projections are for negative 6.5% GDP growth this year, and then a 5% growth next year, and then 3% the year after that. Well, that amounts to a bounce in the economy, not a giant boom. So I don't think people should get that excited about the stock market either, and not really expect huge gains from here. Yeah, it's nice if you held on and it rallied up. And if you sold in May, I don't think you're really going to miss out on anything either. I think really it's best to use the rally to diversify, get into things such as gold or silver, which are likely to go up for years, not just a couple months, because the Federal Reserve has pledged to keep rates low basically indefinitely. The government is going to spend more and more money. Just the other day, there's a headline that Trump is looking for $1 trillion infrastructure program. The deficit that the U.S. government has is just simply going to grow, and gold is poised to benefit the most from that. In fact, if someone listening wants to read the argument for gold, type in Stephen Roach in Google, U.S. dollar. He used to be the head economist for J.P. Morgan, and he's predicting that the U.S. dollar starting next year is really going to go into a vicious bear market. Well, if that's the case, gold is the place you want to be. And if you believe the economy is going to boom, because the Fed's printing money, gold is still the place you want to be. So I really think, the logical thing, no matter what your view of the listener is on the market, is to diversify. And you can't really do that anymore with bonds when they don't yield anything. So again, gold is the place to be. And really the what's happening with the bond market makes that a fact.
Are retired people selling off their shares and those shares being snapped up by millennials, younger people?
Yeah, that's a huge trend that is happening. There's a really fascinating article in the Wall Street Journal Monday titled "Investors Approaching Retirement Face Painful Decisions," and the reporter talked to various online brokers, and they found that since January, of 18% of investors across the board have sold all of their stocks. Fidelity, for example, says that 1/3 of investors aged 65 and over sold every single stock and stock fund that they have. And most of that money has been put into money market funds. And the reason people have done this is because of the economic shutdowns. They need the money, especially, say, if you're a small business person, you need the money to shore up your balance sheet, and households are doing that. But also, if you're 65 or older, can you risk going through the type of bear market we had in 2008, in which stocks took 10 years to come back? And the same thing essentially happened after 2000. So a lot of people are saying no and getting out of stocks completely. Now, at the same time, there have been many articles since March that say that millions of accounts have been opened up by younger people with online brokers such as Ameritrade and Robinhood, with very tiny accounts that are now actively trading the markets. The average age of a Robinhood trader is 31 years old, and I have an account with them to see what stocks they're buying. They give you a list of the top 100 most popular stocks by the number of people buying them, and they're mostly stocks that a lot of them have financial problems. Airline stocks, Carnival Cruise Lines, Aurora Cannabis, which was one of the worst performing stocks in the entire stock market last year, and Norwegian Cruise Lines. 360,700 people own that stock, Norwegian Cruise Lines, and that's the worst performing stock in the entire S&P 500 year to date. And other stocks they've been buying, such as the Nikola company, which I never even heard of till it appeared on this list, symbol NKLA. It's linked to making electric cars, but it has absolutely no revenue. That's on the list. Hertz, which is going bankrupt, is on the list. So these people are basically buying stocks because they see them going straight up, and I don't think they have a lot of knowledge of what they're doing. They're just new to the market. And interestingly enough, there's still not one single gold stock on this list of top 100. So the new people, the Robinhood types in the market, have zero interest in gold or mining stocks or silver, which I think is good because you can get ahead of these people, because I think eventually they'll gravitate to there, because we saw something like that with cannabis stocks in the past, where people that used to speculate in small cap mining stocks got into cannabis stocks. And now some of those people, in Canada are returning to the mining stocks, but not in the United States. And I think it's a matter of time that'll happen, and I want to get ahead of those people. I think that's, the best speculative opportunity or trading opportunity in the markets, is to get ahead of the masses before they start to get into the small cap mining stocks. But this is definitely a generational shift. Normally it would take several years of a market cycle, a bear market cycle, to cause a shift of, an entire age bracket, selling and giving up on the financial markets completely. I think something similar happened in 2008 and 2000. And now it's just happening right now, over the past couple months. That's the speed, I guess the speed of the March drop is, made this happen, and then the rebound too, because that rebound has attracted all these younger people to get into the market, and many of them, have moved away from boarding on sports to betting on stocks. At least that's the way they think of it. So it's an interesting social phenomena. I would say we also saw a similar surge in interest in trading something in 2017 when Bitcoin went above 20,000. There are all sorts of stories back then of people opening up small accounts to buy crypto, like $50, $100 accounts. So now that's what's happening with stocks. And Robinhood is offering fractional shares, so you don't even have to own one share of stock. You can own just a fraction if you don't even have enough money to buy one single share.
We'll have more with Mike Swanson right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, when professional sports comes back, will these millennials who have switched from sports betting to the stock markets pull their money out of stocks and get back into sports?
Well, it depends, I would say, on when the next stock market decline really happens. I mean, as long as the market is holding up, they're probably going to keep making money. But once the next drop happens, I think they'll get out again. Yeah, I just think they'll get wiped out. Some of them will stay and figure out, hey, I need to learn figure out a strategy. Others will gravitate to something else, such, I think, gold. They'll say the stock market doesn't work, so I'm going to buy gold. So that's typically what happens, when you get a lot of people try to trade for the first time and then it doesn't work. Because inevitably that's what ends up happening. Most give up, but some gravitate to try a new market. I mean, that's what happened in 2008 again. A lot of people gave up on stocks and got into Forex, which had a big boom in 2009 and 10. In fact, some of the people that got into crypto were people who gave up on gold because gold went into a bear market from 2012 to 2016. So there's kind of a group of people that, they gravitate from one market to another. They make money for a little while, it stops working, then they jump into the next thing that's hot. And reality is they need to sit down and figure out a simple strategy. Just use some stop loss orders, sell when things start to make lower lows. Manage their money, control their position sizes, and these sort of things. That's the real solution to trying to trade and successfully, not just jump in whatever is moving the most.
It reminds me of trendy diets, the cabbage soup diet, then it's keto, then it's something else, whereas any nutritionist will tell you watch the number of calories and have a balanced diet if you want to have long-term success.
Yeah, that's really the perfect analogy. And the thing about sports betting, most of the sports bettors they don't make money betting on sports. There's very few real professional sports gamblers. In fact, I've played over the years. I haven't done it lately, but I used to play poker and go to casinos and do that, play in poker tournaments. And there's many people that are professional poker players who then lose all their money in sports betting. So I think the sports arena of sports betting is where you really get some degenerate gamblers, and very few of them make money, and you can lose money really fast. And then it's an illusion of how easy it is to pick the sports team. It's sort of the biggest similarity in the financial markets I see is options, because you can think, well, I'm going to bet Apple's going to go up or some stock is going to go up, and you may actually be right, but if you don't factor in the price you're paying for that option, the call option, you're going to lose money. And the cost is the premiums you pay on volatility, on time, and all these other things. And sports betting is the same thing. When you buy a sports ticket, you got to beat the spread. You can't just be right on what team is going to win. So these things are always a little more complicated than people feel. But it's sort of a long, drawn out way to go back and answer your question about, well, these people, trying to gamble in the stock market. And I don't think just buying stocks is necessarily gambling, but it is if you're treating it like gambling. Will they just jump back into sports? Well, I would say that most of them haven't been successful there either. Obviously they can't, but they probably weren't successful before the economic lockdowns and sports went off the television set. So most people lose money in sports betting, and it's just the way it is.
I look at a lot of the people, they say they spend $100 a week on sports betting. I said, if you just took that $100 and didn't spend it on that and put it into an account, you'd have $5,200 at the end of the year, and you'd probably think you were a pretty successful sports bettor if you were up $5,200 at the end of the year.
Yeah, that's a really good point. And then imagine if they did buy into a stock sector that's not just jumping, over 6 weeks, but is positioned to go up for several years, and that money can really multiply.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's going on with oil?
Well, it's, of course, crashed in March, but it's also come back. Oil in April had that crazy day where the futures contracts went below $10, but now it's 40. And it appears, I would assume it'll settle in here, establish a range, just kind of like I was talking about with the stock market, and then go from there. I'm not really sure, though, personally, if oil is going to go I think it's going to pause, go sideways, but I'm not sure if it's going to break out to the upside, but before the end of the year, or break down again. I'm more confident that gold's going to go to the upside, and the stock market could likely break down before the year is over. But I'm not sure about oil because I'm not sure what is going to be more important to it. the economic weakness that is likely to continue, or a falling dollar and rising inflation, which I do think is in the future. So it's something I'm, watching and not really made up my mind, but it's something I certainly do want to invest in, oil stocks, at some point in the future, because they pay great dividends. And I do think we're in a commodity bull market cycle. And when you're in one, gold and silver and precious metals tend to go up first. They've been going up. And then soft commodities follow, and they're just sitting on their low. Soft commodities meaning agriculture. They're just sitting there, poised to either turn up, and follow all these other markets up, or just sit and fall again in a couple months later. So that may determine what the ultimate move in energy will be, because in a commodity bull cycle, usually energy is the last thing to go into a new bull market.
What's going on with Bitcoin?
It's just floating around. It fell with the stock market, in March and April, and came back. Bitcoin went back above 10,000, and it's at 9,300, as we speak. Now, I think this is the moment of truth for Bitcoin, because it's, over the years, all it's really done is trade as, with the NASDAQ, except more volatile. So when the NASDAQ has gone up, Bitcoin has gone up more, and when the NASDAQ has fallen, Bitcoin has crashed. And the people who really promote Bitcoin, and believe in it, claim it's going to replace the dollar, it's going to act like gold and all these things, and it's never done it. And if it's going to do it, it needs to break away from the stock market. It needs to go up when the stock market has a decline. It needs to act as a safe haven, and it's never done it. I don't think it ever will. I think in the fall, if the stock market pulls back, I think Bitcoin's just going to crash again. But if it doesn't, then I would say the Bitcoin people are right. And if it does crash again, I would say, look, we finally got to stop talking about this thing and acting like this is something worth buying, and just recognize it for what it is. A virtual coin. And what is that worth? It's just silly. So we'll see, but I do think we should finally get a moment of truth for people to recognize with it before the end of the year.
Mike, if you could sum up what's happening right now, how would you do it?
Oh, we've going through one of the most unusual moments in financial and economic history. The stock market essentially crashed in March, fell over 34%. The economy is still very weak. The Fed expects negative 6.5% GDP growth and a mere bounce in the economy next year. Unemployment officially is like 13.7%. It's still very elevated and high level. We're not going to have an economic boom for a couple of years. And when it comes to the stock market, then the question is this a bear market rally or the start of a giant boom? I think it's the former, but again, it'll be a battle between the bulls and the bears, most likely, for the next several months before that question is ultimately resolved. And the financial environment with interest rates at zero make it difficult for people to diversify, while many people in the United States 65 and older have given up on the stock market and sold all stocks they own. They've gone into money market funds. And that's not really a solution long term because of the dangers of inflation. And gold in this environment is a necessary thing to buy. I think every American should have gold and silver in their accounts. There's ETFs to do it. If you want to try to make more off that, then buy mining stocks because they're more volatile and they'll go up more. But I think that what I've said, it pretty much defines the rest of the year and what we're going to see going forward.
Mike, thank you so much for chatting with us.
Thank you. Good talking with you.
My guest has been Mike Swanson, editor of wallstreetwindow.com. If you have any questions for Mike, you can send them to info@housestreet.com. Our YouTube channel, Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.